Hi, it's Peter Temple for Saturday, April the 2nd, actually, and this is the market report for Monday, April the 4th. Well, this relentless second wave has been going on for just about ever, and that's the reason for my labeling tonight. It ain't over till it's over, which was a Yogi Berra truism, if anybody is aware of yogi, and I have a little write up in the blog tonight. But here's the bigger picture. This is a 4-hour chart of the S&P, and we'll start here because this is a good place to start as ever as any. And I just want to take you back to where we started off here in May of last year when I called a top May 15th to 20th, just in here, and we came down on what I thought was the first wave. And then we've had this ABC up, and here has been the big question as to what this pattern is here, because it did not come down in 5 waves, it actually came down in 3. So I actually have this labeled as an ABC, which it technically is, but at the time I labeled it a truncation. So it could be a truncation, but it's interesting that wave 2, which we're labeling this wave 2 over here because this is the larger wave 2, has retraced almost all the way to the top. So if it corrects up to the top here, this would really slide this 2 over to the top, and we'd have a double wave 2 leading to a very large third wave down. And I'm not going to do any projections tonight because I really need to wait to see where this thing ends up. And so that's the big question. We've had sort of 5 down here, but again, this area with the truncation makes this an ABC, and it would be technically correct for this wave to come all the way up to the top. And as we jump in, we'll take a look to see whether that's actually possible. We're zoomed in here to a 30-minute chart of the S&P 500 so that you can see this second wave all the way up from the February 11th bottom here, which was the beginning of the first wave, or what I'm labeling as a first wave down of the third. And you can go back to the wider chart for that, the 4-hour or the daily chart, to sort of see how that lines up. But we had an A wave up here, and this entire wave is up in 3 actually, because we have an A, B, C, and I'm going to help you a little bit here with the labeling so that you can understand how Elliott wave is labeled. So A, B, C letters are always counter trend or corrective moves. Numbers are always mode of waves. So within this ABC, this B wave actually has, and this is typical, has a mode of wave within it so that you can actually measure and label the waves. And that's exactly what I've done. So you can see the A wave here, we had a B and 3 waves come down, and we've got this big 5-wave monster that's gone on forever. And I've labeled it 1, 2, and then a 3 here. I've actually relabeled this based on where we are now. 3, 4, and this would be the top of our 5 waves of the C wave. And so you can see here that when we put these labels at the top, this actually ends the 5th wave, which is here. It ends the larger 5 waves, which is this area. It ends the C wave, which is all of this area, and it labels it a wave 2 at the top here. There's a couple of ways to label this, and I've labeled it the most obvious to me, but you could label this a 4th wave. It's still, any way you label it, we end up being in the final 5th wave here, and I'm going to jump in one more time a little bit tighter. You can see that our RSI is starting to lose a tremendous amount of momentum, and actually this wave is losing momentum. It's starting to actually turn over here. You can see this kind of bowl forming as it's starting to lose momentum. The other interesting thing that I did was, if you measure the first wave, which is very typical, this first wave coming up, and then you go up here to the bottom of the second, 1.6 times the level of the first wave up here ends up right up here at the top of the third, which is exactly what should happen. And so this means that this is the 5th wave. So I've done this a number of waves. We are in the final wave. And in actual fact, if I was to take this 1.6 times the first wave, which is typically the length of the 5th wave, if I put this at the bottom of the 4th wave here and expecting this 5th wave to be 1.6 times the length, it actually takes us up to 2150, which is a new high, like a total high. but we're already in the fifth wave of the fifth wave here, so we're losing momentum very, very quickly. And while I expect it to go up a little further, I certainly don't expect us to get to a new high. So the question is, what's going to happen here? And so let's jump in a little tighter and look at this particular wave, this fifth wave going up. Here we are zoomed into a 15-minute chart of the S&P 500, and we're really focused on this fifth wave, which I talked about in the last slide. So here we are at the bottom of the fourth, and you can see that we've done 1, 2, 3, 4, 5 waves up, and we're in this final wave. This is looking like an ending diagonal. Now, we didn't get an overlap of the fourth and the first wave here in the S&P 500, but we did in ES, in the futures, which is the S&P E-minis. So this really is, and it certainly looks like an ending diagonal there. This looks to be in this is in three waves here, if you look at it, and we've got a fourth wave here, which has come down. And if I was to look at the lengths, and this is typically what I do because we expect the waves to have a typical ratio. If I take the first wave and I measure that, and then I extend our Fibonacci tool up, usually you'd expect this wave to do 1.6 or 2.6 times the length. The third wave did not. It's an odd length, so that tells me that it's getting a little more compressed here and losing some momentum. The fifth wave rather, should be 1.6 times the length of the first if this is a normal fifth wave, but it's actually there right now. So we're essentially topped, and that's all it really needs to do. Being an ending diagonal, we kind of throw these measurements out to some degree because we expect this ending diagonal to exceed, to do what we call a throwover of this top trend line here. So it should go above this and may go up to 2.6 times the length. It's really kind of up in the air, but I expect this to be heading up, and actually we may do one more down and an up to finish this ending diagonal. But this is the fifth wave. It isn't going to go, as far as I can see, to a new high. It looks like it's just about done and about to keel over. Now I've got a cycle date of April the 6th as being a big turn date. We're going into the fourth, so sometime in the next 3 days I expect this turn to take place, and that's where we'll leave the S&P right now. Here's the New York Stock Exchange, and I always look at the NYSE just to see what's really happening. This is my taking a look under the hood, if you will, because I think that this lies less than some of the other more exuberant indexes. So we can see the same configuration here. We've got this ABC wave up from February the 11th, and the C wave here has got the same configuration, 1, 2. I've labeled this somewhat differently, 3, 4, and this is a longer fifth. So we've got the 1, 2, 3, 4, and a fifth of a fifth here, and you can see this is an ending diagonal because we do have the overlap, as we have in some of the other indices and certainly in the futures. So we label this again because it is an ending wave as a 1, 2, 3, 4, and we're in this fifth wave, which should go above this upper trend line and stop somewhere in this area. And so that sets up all the indexes really looking the same and being in the fifth wave any way you label this. So we're expecting a turn in the next few days, and everything seems to point in that direction. Let's take a quick look at the euro. This is a daily chart of the euro, and I show this just because it really is a major inflection point that we're at. I've relabeled this. If you remember the last time I showed this, I had this as a triangle in here, and we've now gone past the top end, the E position on this triangle, and now I'm labeling this as a 2. So what we're doing is correcting, very much as we are in the US indices. We're correcting this first wave up, and I've been saying that these have been moving in tandem for quite some time. They're now moving pretty well in lockstep in the same direction. So this has got a little bit further up to go to correct up to this double 2, and then I'm expecting this to head down into a very large third wave of a fifth. This entire correction has been a fourth wave after this big third wave down in the euro. So that's what we're looking at there, and I'm just going to take a quick look at the US dollar and Canadian dollar as well, because that as well is at a major inflection point and ready to turn the other way. Here we are looking at the daily chart of the US dollar Canadian dollar. And you can see that we did 5 waves up here, and we were looking for this turn quite some time ago. This was in the end of January, beginning of February. I think this is actually end of January. And we had this ABC down, which I have been watching, and I've shown that quite a few times. It's actually come down now to the previous 4th wave, which is typical for a 4th wave correction here. And so I'm expecting this correction to turn back up as we see the euro going down. This would be moving in the same direction into a very large 5th wave. So we're at a major inflection point in CAD. We're in an inflection point in the euro. We are in the US equities. Everything seems to be moving in tandem. So we're looking for a major move down. And I think, even though I have got the alternative the alternative video on the site, I see less and less chance for the alternative now, which was calling for the market to go to a new high, if you remember that. So I'm going to leave it on for one more go, but I think it's pretty well a done deal that we're going into a very large 3rd wave here. So great trading. This was a little bit of fun to do this summary of where we are now, because I think it's pretty well one-sided. We're going to turn in the next few days, and I would look at April 6th to be the final date. I'm going to be looking closely at that, but we may see a turn even before then. Good trading.